Olá a todos que acompanham o Onde Investir 2025. Hoje eu converso com David Duong, Head de Research da Coinbase, principal exchange de criptomoedas dos Estados Unidos. Eu converso com David sobre o que esperar do Bitcoin em 2025. Hi David, thank you for agreeing to participate in this interview.
Lucas, thank you so much for inviting me.
Bitcoin surged after Trump's victory, with many saw as a reaction to expectations of crypto-friendly policies. How do you assess Bitcoin's performance so far, and how might policies from Trump's presidency boost cryptocurrencies this year?
Yeah, I think the rally in the last few months has really been about everyone else kind of catching up to where crypto advocates have been for years. And that's the idea that this is a firmly established asset class with real staying power, which all of us believed in. And this is why we've been in the crypto space. But I think that many people for the first time started to look at it and say, like, oh, wow, like from a political perspective, like everyone's talking about it. And not just in the US, by the way, I think it's happening abroad as well. So I think that as a result, many people believe that this is now much more established. And we saw the price kind of catch up to those views. But I think that there's still so much more to do in the space, definitely from a regulatory perspective, and definitely like for what's going on in the U.S. because we've seen that abroad, things like Nika in Europe or what's been happening in Singapore or Dubai. I mean, like a lot of other countries have already been looking at like studying the frameworks for building a real crypto kind of legislation. But I think the US has been somewhat behind and they're now just kind of catching up to this. But given what we've seen in terms of a very pro-crypto legislature, I think a bipartisan one, I should mention, I think that the opportunity here is that we can see a either revamp of Fit 21 or maybe just building on Fit 21 to come up with new legislation that could actually have a real shot of being published or being done sometime in 2025, if not the first 100 days of the new administration.
The Trump administration has also reassured markets with its decision to nominate Paul Atkins to the SEC float and float the idea of creating a strategic Bitcoin reserve. How might these developments benefit the broader cryptocurrency ecosystem, and what impact could they have on investors and institutions?
Yeah, I've been fortunate enough to be on the road and talk to a lot of people about, both events, actually, like almost equally. And I would say that, number one, there's a misunderstanding about what Paul Atkins represents for this administration, at least coming from crypto natives, because I think a lot of people were very optimistic when Gary Gensler came to power at the SEC because people thought that he was very crypto forward. And of course, it turned out that he tried to push forward a regulation by enforcement kind of agenda, things like that. And some people have been concerned about Paul Atkins from that same kind of lens, and they really shouldn't be because, Paul Atkins was the person who actually hired Hester Peirce and Mark Rueda at the SEC. He, of course, has had a consulting business for crypto businesses. So I would say that we are in a very different kind of regime than the one that we saw under Gary Gensler. But you also kind of brought up that what's going on with the strategic reserve. And of course, I think this shouldn't just be observed over the lens of what's happening in the US, because this is also influencing behavior across the world. And we're seeing it in Brazil and Chile, Germany, Russia. I mean, like a lot of places are now talking about potential for Bitcoin strategic reserve, or at least potentially putting Bitcoin somewhere in their treasury. So I think that this is going to be a major sea change internationally. It's not just going to be US centric. And it's really going to be a question of like, is there going to be a first mover advantage here? Like, what are the changes that are going to be necessary in order to make this happen? We're seeing even within the US, a lot of individual states like Pennsylvania and Texas are also making the consideration about what it means to have a potential state level strategic reserve, including Bitcoin. So I think that this could be a major catalyst for the new year. The only challenge is that we don't necessarily know what the timeline is going to look like for that.
Another significant driver of Bitcoin's momentum has been Michael Saylor's experiment with MicroStrategy, which introduced financial products backed by Bitcoin. What is your assessment of this initiative, and how do you foresee it evolving this year?
Yeah, I think it's really seen by many people as like kind of the tip of the spear, which is to say that he's probably just the first in a long line of companies that may actually start to include Bitcoin in their treasuries. And, I think that a lot of people, a lot of crypto advocates are excited about this prospect, but we need to be kind of realistic about what this means, because I think for a lot of smaller companies who may be considering putting Bitcoin on their treasuries, like there still are insurance considerations, things like this. So we will see that as the regulations shift, maybe more companies will start to consider this. And we've seen now that there are some larger corporations who have considered the proposal to include Bitcoin on their treasuries. Microsoft famously rejected it earlier, rather late in 2024. But at the very least, it was considered. And I think that now these are going to be serious proposals that a lot of companies are going to need to think about. So I think that this is kind of what I look at when I think about, Bitcoin being included in more corporate treasuries in the future.
Some observers have raised concerns suggesting that strategy could pose risks to right profile failures such as Terra Luna or FTX. What is your perspective on this risk, and how do you believe it might influence the market?
Yeah, I mean, MicroStrategy now has somewhere around 450,000 Bitcoin on its treasury, and I think the concern a lot of people have is that this was all bought through leverage plays, and given the amount of leverage utilized to actually, make these purchases, is there any major risk in terms of cascading kind of, margin calls or things like that on the part of MicroStrategy? And I mean, I think if you look at the average price in which those Bitcoin were obtained, we're far above that level right now. So perhaps this isn't a near-term kind of problem, but I think people are kind of looking at it of longer term, if they keep accumulating Bitcoin at higher and higher prices, for example, eventually, does that price actually, the buy-in, the cost basis price actually start to become a problem for them? I mean, it's hard to say. I don't think that that's going to create a concentration issue just yet. But it's something that I don't think that, we should just completely be ignorant about, something that I think we do need to pay attention to. But I don't believe that it's a major problem, at least from a systematic perspective for Bitcoin itself.
Turning to altcoins, assets like Ethereum have yet to reclaim their previous all-time highs. In your view, are we likely to see a repeat of past cycles, where smaller cryptos experience sharp rallies during a potential alt season?
I think from a technical perspective, which is to say, I think from a supply-demand perspective in terms of where the long-term holders are and how much staking is involved in ETH right now, I do think that it's overdue for some catch-up relative to some of its peers. And I think many people have speculated about why ETH in particular hasn't really kind of caught up to Bitcoin or Solana or other things. And the expectation is, or the view rather, is that a big part of that has to do with the extractiveness of layer twos on the Ethereum ecosystem. I think that that's kind of a misconception. In part, what's happening on the activity on Ethereum side of things anyway, is just the nature of scaling in general. If you had taken any scaling approach, whether that would have been sharding or layer twos, when obviously the layer two experiment has been vastly successful from the perspective of reducing costs, reducing latency, and actually bringing a lot more users into the ecosystem. I think that, if you had kind of gone any way of these things, you would have seen that, some of that activity would have flowed away from Ethereum L1 proper. But really, if you look at just the number of users, amount of transaction activity, it's been fairly stable to flat on Ethereum itself. So it's really because you've made fees so much cheaper on the L2s, which have kind of led to this. And to be honest, ETH was over-indexed to the idea of ultrasound money, which also kind of, I think, impinged on its value prospects as well. But I think that if we're looking into 2025, what could happen? I think the fact that staking could be included in ETFs could be a very big prospect that could also boost ETH, for example, and probably some of the other tokens that may see approvals this year. But even like the change of ETFs from cash to in-kind creations to redemptions, I think could be a major one in terms of adding efficiency, adding better price discovery, and actually improving the prospects for a lot of these tokens.
Past market cycles have been characterized by distinct trends, from the rise of DeFi to the boom in meme coins and AI-related tokens. What emerging trends do you see taking shape, and which ones, in your view, have the potential to dominate the narrative this year?
Yeah, I think DeFi is a great one, by the way, because there was this perspective of like after the 2020, 2021, like DeFi, like summer season, that for the most part, a lot of people were like mischaracterizing DeFi as dead, and clearly it's not. And if anything, we're saying DeFi has had a resurgence, but I don't think really DeFi left. I mean, it had a down period, but it's definitely back here. And part of that is because we're seeing stronger regulatory expectations that could start to allow certain things to be like transacted more like broadly in the US and not just offshore. So I think that could be a major one. But of course, I'll kind of separate things into two different buckets as far as themes of what to expect. And number one is what's a low hanging fruit? Like, I think what are the easy kind of calls in the space? And I think that for me would be things like stable coins. DeFi is also in that bucket, but it would be like stable coins, tokenization, themes that I think will play very prominently in this space because, these are crypto's killer apps. And I think that many, even institutions, are looking ahead to try to include it because this is going to actually increase not just the market cap for stable coins, but increase liquidity in the space. And this is what people want as far as trying to transact on remittances and other things, make the payments cheaper. But in the second bucket would probably be more the frontier technologies. What are the things that are very crypto native, which could only be done on blockchain, which are really relevant to our space? And there I'm looking at AI agents being the very big one. I mean, that's probably the newest, hottest theme that we're seeing crypto at the moment. And there's, like this big difference between AI agents versus AI bots. I had to explain to someone yesterday the difference between bots versus agents and what that means, and the autonomy behind AI agents and what they can do here could maybe transform the way DEXs work and other things. So that's a big one. Then I would say like prediction markets showed their true colors during the US elections. And I think that, yes, there are non-blockchain variants of prediction markets, but the blockchain variants are the ones that were very successful because they showed what smart contracts can do in terms of automatically resolving conflicts, for example, payouts, things like that. So I think that that's going to be a remaining big theme here. And I do believe that people are still going to be focused on some of the ones that were emerging in 2003, 2024, such as DePIN, decentralized physical infrastructure, as well as gaming. And some of the more frontier ones like the decentralized science could also be fairly interesting in 2025.
Returning to Bitcoin, after breaking the critical 100,000 milestone, some argue that its potential price target could go far beyond. Projections range from 500,000 to as high as 1 million. What is your take on Bitcoin's true potential, and what key factors could drive its valuation higher?
So, as an exchange, we don't put out a forecast on tokens ourselves. Okay. We take a very agnostic view to tokens themselves. But I do believe that there is more upside for Bitcoin. Now, I think it's not going to be purely linear. I think everyone would love to see a chart that just goes up and to the right forever. I don't think that's going to be the case, but I do think that the visibility I have, which is probably only goes as far as like through the first quarter of 2025, I am very constructive about what the prospects are. Now, I don't know if we're going to see the same kind of like gap that we saw in Q4 after the US elections, because that was a very major catalyst. And, the fact that we elected pro-crypto candidates in both the House and the Senate in the US, I think was major, because in the Senate, for example, you have around like 59 like senators like incoming to the new administration that are going to be very pro-crypto, 289 candidates. So we're well within the thresholds beyond the filibuster rule in the Senate anyway, like to actually get something done as far as crypto legislation is concerned, which is a very, very strong positive. So I think that that's what's been behind some of these numbers that we've seen. But even beyond that, I think the macro environment itself also lends itself to a much better kind of risk-taking environment. And maybe we will see that crypto is going to trade, or Bitcoin rather, is going to trade intermittently between being a macro asset versus being a risk asset. And I think that's just going to be the nature of things. I don't think it's going to be purely in one bucket versus the other. But through the course of like Q1, for example, I think that this is going to like serve it very well, given what I see happening on both the monetary and the fiscal side in the US.
At the end of the last year, BlackRock suggests that allocation 1 to 2% of portfolio to Bitcoin is a reasonable approach. Do you believe more asset managers will start recommending Bitcoin? And do you think investors will follow suit?
I think already we've seen that many of the large real money shops, and I'm talking about real money players being like pension funds, endowments, people like entities that have like a 30-year time frame to try to match their liabilities with their assets, are already kind of looking into crypto as an opportunity to actually diversify their holdings. And we've seen that with Michigan, like Wisconsin, state of Florida is talking about it. I think Pennsylvania and Texas are probably considering it. So the ETFs have been one way that have allowed them to do so, because these are regulated vehicles that really kind of fit into their broader strategies. But one thing that I like to point out to a lot of people is that for many traditional institutions, like I think they need to think about crypto from the perspective not just of the risk reward, because I mean it's important. You obviously get a lot of return when you invest in crypto, and like if you look at it from a Sharpe ratio perspective, that's massive. But you also need to think about it from the diversification perspective, and I think that matters a lot more when you're trying to figure out what is the optimal percentage to put into your portfolio, because it's going to be different depending on each individual's needs, each individual's conditions, things like that. But I do believe that, and actually we've done the math to prove this out, that when you include crypto or Bitcoin and crypto into your portfolio, for each additional percentage point that you add into your portfolio, you increase the level of diversification for your portfolio in faster than linear terms, which is to say that when I add, say, like 1%, I get like 1.2% of diversification, like from a systematic perspective from it. When I add like 3%, I get something like 3.5%. So that number grows like the more I put into my portfolio, which means that adding crypto to your portfolio means that your portfolio starts to look like adding that new asset class. That portion looks nothing like the rest of your portfolio. It doesn't look like equities. It doesn't look like bonds. So I think that's something that's really important to mention. And I think that's what's going to be the important consideration for a lot of those new entities looking to add crypto to their portfolios.
You mentioned ETFs. Spot Bitcoin ETFs in the US achieved a net inflow of 30.7 billion in the first year. How do you assess the impact of these crypto products on the crypto market? And what are your expectations for their development this year?
Yeah, so like I would say that by any measure, like these have been very successful instruments. I think Bloomberg said that over the last 30 years, this is in the top, like I believe they said like 0.1% of the vehicles the ETF vehicles that are out there. So I mean, this is massive in terms of the numbers that we're talking about, because prior to this, we were just looking at like gold ETFs being the like most clear analog, and they had somewhere around like $5 billion in 2024 terms in their first year. So, $34 billion, I think are huge. It should not be like lost on anyone how big this has been. But I think that some of the opportunities on the ETF side were held back by the fact that the SEC forced us to have like cash creations, redemptions of ETF shares, for example. So I do think that there's going to be a change as far as like new applications. I think there are already like 16 new applications for the ETFs, 9 being like single name ETFs like HBAR, LTC, or Solana, or like other tokens. So I think that the focus has been on, what are the new ones coming out, and what the flow that's going to go to Solana as a result of having an ETF. But I really think that we need to think about market efficiency and changes that we're going to see on the system side of things in terms of how authorized participants are going to be able to actually, make markets in the Bitcoin that they need to purchase or sell on behalf of these ETF issuers, because we're not going to have cash creations and redemptions anymore. We're going to move into an in-kind creation redemption kind of regime, or what's going to happen if staking is going to be included in the ETFs. I think those are the considerations that I would make for what's going to happen with these ETFs in the future.
In Coinbase Crypto Market Outlook report, you mentioned that the new wave of real adoption in cryptocurrencies could come from stablecoins. Why do you believe this? And could you elaborate on this perspective?
Sure. So, right now, I think, like we published our report on December 12th, our crypto market outlook 2025. And at the time, we were using December 1st numbers, and it was like $193 billion was the market cap. I mean, I just looked this morning, and it's like closer to $206, $207 billion. So already just in that time alone, like we've seen the market cap of stablecoins grow. And I think a big part of that has to do with trading still. But we're seeing that payments is becoming a major part of the stablecoins future. And, we often refer to stablecoins as crypto's killer app, in part because it has such strong product market fit. And I do believe that we're going to see that as the adoption of stablecoins is kind of being folded into many of the largest kind of incumbents in the payment space. And I'm talking about like Visa, MasterCard, I'm talking about Stripe, I'm talking about PayPal. I mean, I think that there's a major opportunity because many of them are looking at this and just, in the field of remittances alone, for example, the cost to send $200 internationally is on average around 6.4% of the total. Whereas you could do that with stablecoins and it would be 50 basis points or 0.5%. Probably not even like no higher than like 1%. Although if you include exchange rate costs, things like that, fine. Maybe I'll allow you to say on a conservative basis, let's say 2%, but still far lower than like what we have on the cost of sending money today. So if you could do it for 50 basis points or lower, why wouldn't you do it? And I think a lot of the current incumbents in the space recognize that. And that's why you've seen in large part the amount of transactions settled by stablecoins go up so much in 2024, because we actually saw that triple in 3x in 2024 from around 9.5 billion between January to November 2023 to the equivalent $27 trillion over the course of January to November 2024. So I think that these are the major numbers that we're seeing. I think stablecoins really represents a very strong future. And this is why many people look at it and say that this could be a $3 trillion market cap in 5 years' time. And those are coming not just from players like Circle, I think Jeremy Allaire cited that number, for example, but others as well, just independent analysts have also cited fairly large numbers for stablecoins. And it's not crazy because you look at the US M2 money supply, for example, it's somewhere around $21 trillion. So $3 trillion is really just around 14% of that compared to the around less than 1% that it represents today. So it's really not that far off.
Thank you so much for this interview, David.
No, it was my pleasure, Lucas. Thank you.